We have some great news for Tesla stock to go over here in this video, as well as the bad news. There's a lot of bad news today, so I think we need to talk. The Nasdaq is down about 1.5% at the time of recording this video. First off, because of this. Credit card debt is now over $1 trillion for the first time, and apparently a huge test for card holders is coming. Within the last month, credit card debt has went up $45 billion. This number has grown consecutively over the past 7 quarters. And according to this expert, the real test of consumer debt, specifically credit card debt, is when student loan repayments kick in next month. This will shrink the amount of money borrowers have to devote to paying off credit card debt and leaving some people simply unable to make minimum payments at all. If you take a look at this chart, we are far above pre-pandemic credit card debt levels by about $100 billion or so. This is one of these situations where people are still spending money. As long as they can service that debt payment, we'll be fine. But when people can no longer service that debt payment, that's where you go over the edge and you hit that tipping point. Chinese exports suffer the worst fall since the start of the pandemic. Imports tumbled 12.4% and exports declined 14.5% year over year in dollar terms. Take a look at some of these charts. These are monthly exports and monthly imports. Your exports just keep falling. You had much healthier growth when China was shut down in 2021. Look at that. It's going negative very quickly. Your imports, same thing here. Your imports hit a high in May of 2021, up 52%. This last month, they're down 12.5%. China is rapidly heading into a recession. The Eurozone entered a recession on July 8th, 2023, but data coming out from Germany is signaling this is getting worse, and it's getting worse quickly. Industrial production in Europe's biggest economy fell 1.5% in June compared with May, driven by a 3.5% drop in Germany's vast automotive sector. The decline in German industrial output, much steeper than forecasted by economists, raises the risk that the manufacturing heavyweight will contract again later this year, potentially falling back into a recession. The construction sector, where output shrank 2.8%, also had a negative impact on overall industrial production. This is only the tip of the iceberg as far as the problems the markets are facing today. Moody's has downgraded U.S. banks and warns of possible cuts to others. Moody's cut the ratings of 10 banks by 1 notch and placed 6 banking giants, including Bank of New York Mellon, U.S. Bank Corp, State Street, and Truist Financial, on review for potential downgrades. They say, quote, "Many banks' second quarter results showed growing profitability pressures that will reduce their ability to generate internal capital. This comes as a mild U.S. recession is on the horizon for early 2024, and asset quality looks set to decline, with particular risk in some banks' commercial real estate portfolios." Moody's said elevated CRE exposures are a key risk due to high interest rates, declines in office demand as a result of remote work, and a reduction in the availability of CRE credit. The agency also changed its outlook to negative for 11 major lenders, including Capital One, Citizens Financial, and Fifth Third Bank Corp. These are very large banks we're talking about here. These are not your small and regional banks. These are big players that are being downgraded and having their ratings cut today. And it wasn't just one, It was almost 20 in total that were cut or that got a warning that they're about to get cut. Moody's cautioned that banks with sizable unrealized losses that are not reflected in their regulatory capital ratios are vulnerable to a loss of confidence in the current high rate environment. What they're saying here is there is still some accounting tricks that are hiding some massive unrealized losses. And when those come to bear, the situation could get even worse. Moody's also downgraded M&T Bank, Pinnacle Financial Partners, Prosperity Bank, and BOK Financial Corporation. What really stands out to me, and I think what is really affecting the markets today, is do you remember the $30 billion initial bailout that 11 banks gave First Republic back on March 16th of 2023? Well, you had JP Morgan Chase, Bank of America, Citigroup, and Wells Fargo that put $5 billion of uninsured deposits into First Republic. But there was also 5 other banks that contributed $1 billion apiece. And let me list them for you. BNY Mellon, State Street, PNC Bank, Truist, and US Bank. Out of these 5, BNY Mellon, State Street, Truist, and US Bank all got downgraded today or got a warning of a future downgrade. The only one that did not get a warning or a downgrade today was PNC Bank. This is quite alarming, and the banking crisis looks like it might be going to get worse from here. Last time around, the markets rallied off of that, but we'll see this time around. So this is obvious bad news. We don't want to see deteriorating global conditions at a time where stock valuations are not exactly cheap. That does set us up for some downside here in the markets. The next biggest catalyst is going to be CPI, and that comes out on Thursday, and that's going to drive the rest of the move throughout this week and likely even next week as well. Now, let's get into some of the good news for Tesla stock today specifically, with the last week vehicle registration numbers out of China and broader good news in the EV sector. Tesla's China vehicle registration numbers just came out for last week. This is the period of July 31st through August 6th. And the vehicle registration numbers come in at 12,800. Last year in this same time period, you had 6,700 vehicle registrations. So this is over a 100% increase from last year, which is also what we seen last week as well, being over 100% increase year over year, seeing some very strong growth over in China. The next piece of news today comes to us from Sawyer Merritt, and it's from Bank of America on Tesla stock. They said today, "We reiterate our neutral rating. We view the company as a trailblazer in the EV market and believe it could be successful as EV demand increases over time." As Sawyer Merritt also points out, could be successful is very strange. That's what I thought when I first read this, and that's what Sawyer Merritt's comment says as well. I'm glad I'm not the only one that picked up on that. Tesla has already been very successful, but nonetheless, they go on to say that Tesla's self-funding status and ongoing access to relatively low-cost capital should also help support future growth. That said, there are a number of hurdles, including uncertainty in the broader macro environment, risk to EV demand, growing competition, and management distractions that could persist over the near term. Something I really like that they highlight is right here, where they say Tesla's self-funding status. This is something that Wall Street has not really appreciated within the last year. Your Apples and Microsofts, your big tech names, even a Meta for that example, that have done well like really well in the past 12 months have been your stocks that are self-funded, that bring in enough net revenues, net profits every quarter to grow the business without needing to go to markets and actually raise capital. That is Tesla. And nobody else in the EV space can say the same. Lucid's losing $500,000 a vehicle. Rivian, they are set to report earnings today after the bell, and they are expected to lose hundreds of millions of dollars. Tesla's the only one that's self-funded. Even Ford has lost $7.5 billion in the last 2 years in their EV sector of their business. Tesla is the only competition out there, and the only competition for Tesla domestically, as far as the numbers go with companies, is Tesla. Nobody can create a profitable electric vehicle and bring it to the markets today, and likely won't be able to for years, multi-years to come. Tesla appears to have quietly rolled out its support for official third-party applications. The first third-party app is Standard Fleet, a fleet management platform that currently is being used by a number of Tesla ride-sharing and EV sharing companies across the globe. Standard Fleet is basically a platform in which you can manage your Tesla. As you see right here, it could tell you have low tire pressure, you need to charge upon your destination, that your car is locked, you could remotely control your car. That's what Standard Fleet is. I don't think this is a big deal in the grand scope of things, but what this is a big deal, or why this is a big deal, is because what about the other third-party apps? When those start to be allowed in Teslas, that's where things get a lot more interesting. Imagine if you could use your smartphone in the dashboard of your Tesla, or have your Tesla be comparable to your smartphone. That's where things truly get mind-boggling, and the use cases for buying a Tesla become far more superior than any other vehicle, although they're today far more superior. Elon Musk is giving us a little bit more clarity why Zach Kirkhorn no longer works at Tesla. He has been the CFO for the last 4 years and stepped down yesterday. Elon Musk says 13 years is a long tour of duty, and Zach will spend time with friends and family and then do something else. So as a lot of us thought, it looks like Zach Kirkhorn left Tesla because he made a lot of money, and maybe it's a stressful job. And maybe after you make over $500 million, you want to do something else. After all, you have the money to buy your freedom. Tesla has confirmed they installed 3,200 superchargers in North America within the last 6 months. In other EV news, General Motors is expanding the number of models that will be capable of vehicle-to-home V2H bidirectional charging. Previously, only the 2024 Chevy Silverado EV RST and 2024 GMC Sierra EV Denali Edition 1 were confirmed to have said capability. As of today, GM is promising the 2024 Chevy Blazer EV, 2024 Chevy Equinox EV, and the 2024 Cadillac Lyriq, and soon to be revealed Cadillac Escalade IQ will feature V2H charging. Additionally, GM says its whole retail portfolio of Ultium platform vehicles will have V2H by 2026. I think this is exciting for all EV owners. Eventually, this is coming to every EV manufacturer. This is essentially where you could power your house if your power went out. I know that quite well. When your power goes out in your house, well, it would be handy to be able to use your car as a generator per se if you had to get something done or maybe keep your food fresh. That would be very convenient and very handy and useful. In regards to Tesla stock performance today, Tesla stock is down 0.65%. Again, one of those days where Tesla is outperforming if you look at the NASDAQ. This is a positive sign. Tesla is fighting around that 250 support level. At the time of recording this video, Tesla stock is $249.90 per share. It's very volatile, and you're trying to get above 250. If we see a move in after hours or even in the last couple of minutes of trading and we get above 250 and close above that, that's a really good sign. If we don't, it's one of those scenarios in which I've said before and I'll say again, if the markets come down, it's not going to matter. Tesla stock is going to fall. But Tesla got some good news today with the vehicle registration numbers, and the stock is doing about 2 times better than the NASDAQ. That is a positive sign here on the day. Short sellers in Tesla stock are down about 61% still within the last 3 months. The dollar amount that is currently sold short in Tesla is worth $22.62 billion. The option activity today is more bullish than what we have seen recently. Over the past week, the positive order value has been 55%. Today, the positive order value is 59%. You have seen 440 hedge fund and institutional orders come through, worth $150.55 million. So a little bit of an elevated day as far as option activity, and the call buyers, the bullish option traders, are out with Tesla stock today. That is great news. Could explain some of the outperformance for Tesla stock today. If we take a look at Tesla's option chain heading into this Friday, the strikes with the largest amount of open interest are the 260 calls as well as the 270 calls, seeing some nice activity today. The 260 call is seeing volume of about 45,000 today, has an open interest of 30,000. Anytime you see the volume on any day larger than the open interest, that tends to be a very positive sign. Now, the 270 call is seeing volume of 15,000 today, and it has open interest of 29,000. Not as strong as the 260 call, but still very good activity overall. Tomorrow is going to be a slow day for the markets. You don't have any economic data that comes out, so all eyes are on Thursday when we get the CPI report, and nothing is expected to change on a month-over-month basis. The numbers are expected to come out the same this month as they did last month, besides the year-over-year headline inflation reading that is expected to come in at 3.3%. Again, anything over 3.5%, and the markets likely fall around 2% or so. Anything that is 3.1% or lower, the markets probably rally about 2%. So this is going to be the next big catalyst that will drive the markets, minus anything that is unforeseen that happens over the next 36 hours or so. So that is your EV update on the day today. That is your Tesla update as well as the broader markets. Hit the like button and subscribe to the channel if you made it to the end of this video and you learned something here in the video. Most importantly, enjoy the rest of your day. I will see you in the next one.